Hello everybody, welcome to this week's edition of Northwest Quadrant Wealth Management E-News. Thank you for joining us. So obviously we missed a week there. Josh and I we both had some vacations that we just couldn't make the E-News work. So we're back here in the middle of August, and obviously in the time between the last E-News and this one, we had a market correction, a pretty significant market correction of about 10% on the S&P 500. And obviously, it was, I guess, scary for people at the time. It was very short-lived, obviously. Markets went down very quickly. There was a bunch of things that sort of came together to make markets sell off. But you get really swift and violent market moves down when the market is priced like it is. I mean, stocks are certainly not cheap. Earnings certainly have been growing, which is great to see, but still have stock prices. And so stocks are at that place where they're sort of priced for perfection and have a lot of expectations about what earnings need to look like and what the U.S. economy needs to look like. And if those things don't happen, then we see a sell-off. But, that sell-off was scary. We did certainly get some phone calls from people. Of course, we got that this time it's different and all the reasons it was going to be different. But here we are sort of back where we were before the market correction, and nobody wants to do anything now. And so remember, when we make changes to portfolios, when I say we, meaning you, the clients, you should only be making changes to your portfolio based on your life circumstances, not what the market's doing. We can't control the market, but you can control what's going on for the most part in your life. So we never want to make market-based changes unless it's to buy more stock when stocks are down or sell stocks when stocks are way up. We will have those conversations, but we never want to be selling stocks after they've gone down 20 or 30%, because generally we're closer to a bottom in that situation. So we did have some market volatility while we were gone. It was scary at the time, all the unwind of certain big trades that were happening globally, and a bunch of other things that we won't know about until 6 months from now. But at the end of the day, people are still going to line up and go to Costco and buy Nike shoes and buy stuff on Amazon, and over time, earnings are what drive stock prices, and we know earnings will grow over time. In the short term, we have no idea what's going to happen in markets, and neither does anybody else. So Josh can tackle sort of the inflation numbers, which thankfully continue to move in the right direction, just not fast enough.
Well, one data point does not a trend make, and of course the market sold off on that bad unemployment number or that bad jobs number while we were gone, but we've got a deluge of data this week that sort of contradicted that bad unemployment filing number, and we've got retail sales that are actually negative year on year when you adjust them for inflation, but that's got small caps and stuff ripping 3% to the upside this morning. So the market seems to have forgotten about that missed data point. But the good news, of course, and the main focus of markets this week is inflation continues to be declining. We're now at 2.9%, so still about 50% above that 2% target, but the general trend is in the right direction, but that last mile is going to be the hardest. But of course, markets now have fully baked in the expectation that some version of a cut, whether it's a quarter percentage point or maybe even a half, is coming in September. And early August should show you when valuations are high and all expectation and momentum is on one side, they're susceptible to volatility really quickly. And we, of course, got that in early August, so don't be surprised if we don't see more of it heading into the fall as the Fed finally makes their ultimate decision.
Yeah, Josh and I certainly don't think we're out of the woods as it relates to volatility, but you should only be using the volatility as an opportunity rather than to try to make some big change to portfolios. So we definitely like where our portfolios are positioned going forward, but that doesn't mean that volatility is not going to affect all of us somewhat. As always, if you have questions about your situation or your account, you can call us at the office, 800-743-0988, or you can email either one of us, Josh or Tyler, at northwestquadrantwealth.com. We'll see you back here in a couple weeks.